This is a visual executive summary of the publication Rebuilding a Social Compact on Responsible Tax. You can download and share the full paper at responsibletax.org.uk. This publication is part of an ongoing engagement and exploration process on the meaning and purpose of responsible tax for the common good. It draws together key insights, topics and discussions covered over the first 10 months of our consultation with a range of stakeholders on what responsible tax behaviour looks like and how it is implemented in practice. With a foreword from Margaret Hodge MP and preface from Jane McCormick, Senior Tax Partner at KPMG in the UK, this report aims to take the debate on responsible tax beyond the blame culture that has often been found in past discussions. Instead, we urge businesses and civil society groups to work together to form productive dialogue and practical solutions. We have engaged with business representatives and industry groups, NGOs and campaigning organisations, government, politicians, academics and the media to produce a thematic review of the issues which are the underlying causes of public outrage around companies' tax behaviour. The support from KPMG for this project has allowed us to consult with tax professionals who would not usually be seen speaking out on concepts such as responsibility and fairness alongside NGOs and campaigning groups. KPMG have also contributed a number of case studies which demonstrate how the concept of responsible tax behaviour translates to a tax advice on a practical level. We start by analysing why tax has become such a hot topic. As a result of the economic recession and the hardships faced by many, there is a heightened sense of injustice amongst the general public if anybody is perceived to be not contributing their fair share. This is ever more acute when it comes to taxation, a direct contribution to the public purse and part of a social contract in which we all play a part. But despite the fact that tax has been catapulted into public consciousness, it is still hardly an accessible topic. Debates on tax often demonstrate a lack of understanding about the complexity of tax systems and why businesses are behaving in the way that they do in relation to tax. So as a starting point, the language of tax needs to change so that debates are opened up to those who want to understand the complexity and the nuances that are involved, not just tax experts and professional advisors. But an improved language on tax would also avoid the adversarial tones often found in the media and amongst campaign groups. Using the lens of the common good means recognising the need to act beyond self-interest. In the first part of this paper, we summarise the key issues which have been identified by participants as those which have been most contentious or difficult to navigate. These are morality, competition, transparency and risk. We examine where and why there is debate, and to what extent there is potential for a shared outlook among stakeholders. From regulation to obligation. Tax efficiency was once cited as an obligation to shareholders and clients to maximise profits and shareholder value. But there is now increasing recognition from business leaders that there need not be a direct conflict between this and the contribution of business to society. Business and business leaders already make moral and ethical judgments on what is right and what is fair, and this is no different in relation to tax decisions. From competition to collaboration. Within the global tax system, how can we avoid a situation in which companies resort to arbitrage between different tax jurisdictions and governments engage in a race to the bottom? These are practices which are particularly detrimental to developing countries. Multinational companies generally agree they are happy to be taxed in countries where profit arises. However, there is a key concern from business that profits are taxed once, not more or less. This is a risk when there is a lack of coherence between tax systems and lack of international cooperation between jurisdictions. We review the work undertaken by the OECD and the EU and look at the potential solutions which have been suggested, such as formulary apportionment and a common consolidated corporate tax base. We also consider future tax competition issues in the context of devolution of tax powers within the UK. From transparency to accountability. By transparency, we are referring to public disclosures rather than disclosures of information to government or tax authorities. But what public disclosures would bring about the greatest public understanding of a company's tax behaviour, and whose responsibility is it to encourage these? In the absence of one universal international standard, change could come from national governments. But change could easily be affected by corporate responsibility too. Indeed, it is clear that meeting transparency expectations is now a sign of leadership. We look at other industries, such as the banking and the extractive industries, for examples of how increased transparency has been implemented and become standard practice. From risk to reciprocity. Many businesses recognise that they cannot just sit back and wait for good behaviours to be imposed on them by governments and tax authorities. Instead, they are asking themselves if they are doing the right thing from the public perspective, perhaps as frequently as they make the same considerations about compliance and the mitigation of more traditional business risks. However, trust is based on reciprocity, and society should respond in a responsible, not recriminatory way. Moving forward, we need the following: recognition and agreement on tax purpose, shaping and sharing tax principles, and working together to lead a common process. We make recommendations to business, investors, and civil society groups on how they can help ensure that tax behaviour and decisions are seen as a core part of business purpose. Rather than an end in itself, tax is a social tool which relates to economic activity, without which it cannot exist. In this sense, tax is part of a social contract between business, the state, and wider society, to ensure the communities within which we all work and live are stable, well-funded, and operating well. If we recognise that tax has a moral purpose, even if the actual word morality isn't always embraced, then tax principles need to be evident and operational. We make recommendations to tax advisors and professionals who have a role to navigate the social context and expectations of wider society. We also call for civil society organisations to develop and provide the tools, templates and resources which would demonstrate the change they wish to see. National governments should seek to implement what can be done locally in an effective manner, but only within the context whereby the benefits to the individual jurisdictions of a different tax system outweighs the potential damage to society when business has to deal with multiple systems. At an international level, the United Nations has an untapped role to actively promote a set of principles of responsible taxation, either through an international charter or integrated within the UN Principles of Responsible Investment. Like the latter, these could be voluntary and aspirational. The very nature of the common good is that it will change over time, and therefore the discussions about it are as important as the outputs in achieving it. Fixing the broken system requires all stakeholders to exercise leadership in this process, rather than wait for new rules and regulations or lobby others to make changes. All stakeholder groups, including business, government, NGO, tax professionals, and campaigning organisations, should demonstrate a commitment to rebuilding a social compact around tax. This will include ongoing dialogue with others with whom they may not usually engage, and might be manifested as a regular standing committee or the joint development of a responsible tax code of conduct. It is vital that businesses continue to lead from the front in this debate. Trade bodies and industry groups should recognise the potential for deeper and faster progress if businesses engage in this debate on a collective basis. We also make recommendations to international institutions such as the IMF, World Trade Organization and the World Bank, and tax advisory firms to use their networks to encourage dialogue and rebuild trust between all stakeholders on an international basis. In the UK, we recommend that Parliament forms an all-party parliamentary group on responsible tax to provide a standing committee which brings together key stakeholder groups to engage with each other and with the wider public. The European Commission and the OECD also have a responsibility to engage with the public and seek to overcome the technical barriers to entry of current discussions by providing action points for individual citizens, shareholders and consumers, as well as national governments. Any ongoing dialogue would stay relevant and practical by ensuring the public is able to make choices in their everyday spending and investing behaviour. We live in a world where power, advocacy and action need not be channeled through intermediaries. A responsible approach to tax means involving the interests and passions of the many, not just the experts, and moving the conversation forward so that everyone has a true stake in the social compact. Our recommendations are summarised in a concluding chapter on next steps, but these should be seen as the start of an ongoing dialogue. The report does not try to synthesise all perspectives into a consensus. What it does do is seek to demonstrate that there is potential for a coalition of the willing to work together on practical solutions in future. We are grateful to all the participants in the consultation process so far, who have contributed valuable and diverse views and insights. Individual viewpoints are available on our dedicated web platform, through which we also invite further contributions to this discussion. Join us at responsibletax.org.uk.